You will see dear brother and sister before and webinar might have ladies. Oh, there is no ladies.
The broadcast is now starting. All attendees are in listen-only mode.
You can put it. So they cannot see my picture. No, no, they will see your picture. But we will see dear brother and sister how it's like we might have sister in بسم الله الرحمن الرحيم الحمد لله رب العالمين والصلاة والسلام على أشرف المرسلين سيدنا محمد وعلى آله وصحبه أجمعين. Dear brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. RT is pleased today to have Dr. Aliyu Tahir Muhammad to present his research paper. The title of the presentation is Risk Management Practices in Islamic Banking Institution, a comparative study between Nigeria and Malaysia. Before we start, let me introduce Dr. Aliyu briefly. He is currently a Deputy Director in the International Institute of Islamic Banking and Finance, Bayero University, Kano, Nigeria. He got his bachelor degree in economics from Bayero University, Kenya, Bayero University, Kano, Nigeria, and master degree and PhD in economics from the International Islamic University, Malaysia. Dr. Aliyu now is a visiting scholar to RT. Dr. Aliyu will present for about 30 minutes. After that, we open the floor for any questions or comments. Now, I would like to introduce Dr. Aliyu to deliver his presentation.
Okay. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Bismillahir Rahmanir Rahim. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatan min lisani yafqahu qawli. My dear brothers and sisters that join us in this presentation, you are welcome. And I say to you, Ramadan Mubarak. May Allah bless you in this blessed month of Ramadan. Inshallah, I'm going to present the findings of our research on risk management practices in Islamic banking institutions, a comparative study between Nigeria and Malaysia. So the flow of my presentation is background, the objectives of the study, overview of risk management, the hypothesis tested, developed and tested, research methodology, findings, as well as conclusion. Now, risk management basically is about how firms select the type and level of risk that are appropriate for them to take. You know, it is about a business protecting asset and profit of an organization by reducing the potential loss before it occurs and mitigating it when it occurs, or reducing the impact it has on the business so that to reduce the total loss. Basically, it has some elements or some dimensions that are considered risk identification, risk measurement, evaluation, exposure, risk mitigation, as well as reporting. Okay. It is, however, when you talk about risk management, it is also used to, you know, to bring some innovative products that sometimes the innovations tend to go beyond the proportion. And it has even caused problems in financial market. We all know about the recent crisis, the 2008-2009 crisis, which is still fresh in our memories. Basically, it's because of the innovative products just to manage risks. Okay, while you have to take care of your risks, but also some of the risk measures are actually not necessary for you to do the financing. So the primary objective of this research basically is to examine risk management practices in Islamic banks in Nigeria and Malaysia. Risk management is not only crucial, one of the crucial areas is in finance, but also is one of the least studied areas, especially in Islamic finance. Of course, we know the importance of risk management. We cannot overemphasize its importance or relevance. Yet, when you look at the literature, there are not much studies that are really tackling the issue of risk management, especially in Islamic finance. So even though in Islamic finance or in Islam, we know the importance of risks. Of course, the Surah Yusuf is full of lessons about risk management. Remember the Prophet Yaqub alayhi salatu wasalam, when he was given Prophet Yusuf, when the brothers asked him to bring the Prophet Yusuf to go out for rearing, he said he is afraid, of maybe he be killed or something like that by an animal. So this is just to show you. And even when they were entering into the town, into Egypt, he advised them to enter from different gates, so that not enter from the same gate that may be affected harmly by other people. And also in a hadith, we know the hadith when a Bedouin asked the Prophet sallallahu alaihi wasallam, he sought his advice whether to tie his camel or leave it and depend on Allah, or to leave it and tie and rely on Allah, whereby the Prophet advised him to tie his camel first and then he rely on Allah. So we have these lessons from Islam, and which we can put in all our risk management issues in Islamic banking. Now, basically, there is no published studies, as I said, that examine risk management practices in Islamic banks in Nigeria. We have not found this, of course, because the Nigerian market is new. Even in Malaysia, where the practice is now more than 3 decades, you find little studies that focus on this area. For instance, Qasim et al., Samad and Hassan, Arif, Dirar, and others such as Shida. Only Shida 2012 and 2014 studied risk management practices, comparing it with Malaysia and Indonesia, Malaysia and Jordan. But all others, they maybe focus on evaluation, performance, and stability. So therefore, there is need to study risk management further in those jurisdictions, especially those new ones that are coming. Now, of course, it assumes more importance than before in financial institutions due to the capital exposure. We know the financial integration nowadays, so you have to be very much careful. Something happened in the US will affect you here in Jeddah or in other places. So this risk exposure requires study on and also careful practice. Therefore, it is evidently clear that corporations must take risks if they are to survive and prosper. The risk management function, therefore, is to understand the portfolio of risks that the company takes or that will take in the future, so that to avoid unnecessary loss. And risk management should also be comprehensive. A comprehensive risk management, the one that includes maintaining a management review process, appropriate limit of risk taking, adequate system of risk measurement, comprehensive reporting, and also effective internal control system. In fact, there is whatever definition we will have, risk management should embody all departments and units of the institution, so that to create what is called a risk management culture. Because once you have risk management culture, so all your employees will be cautious, and they will help you really in managing your risk. So it should not be restricted to only one department. Now, when we talk on Islamic finance, there is this assertion that if Islamic finance has even more risks, it has the sphere of Islamic finance, the risk sphere of Islamic finance seems to be larger because of Sharia compliance issue or Sharia non-compliance issue. So therefore, while it is most of the risks in conventional finance are much related and relevant to Islamic finance, you got additional risks also, which is peculiar to Islamic finance. So therefore, there is need to take care on the Islamic finance side. The spectrum of risks in basically is, we have these 3: absolutely no risks, which in Islamic finance will lead to riba. So once you are looking for gain without taking any risks, so that will lead to riba. And the other one is pure risks. Pure risks is like gambling. You just invest, you can lose all your properties or you can gain everything. So that is pure risk, which is gharar, which is also prohibited. So Islamic finance is in between. There you have to take risks, but also you have to take the you have to take the gain. I mean, you deserve some gain because of the risk you have taken. Now, the background that we have mentioned led us to develop or to use some researches to develop some hypotheses. We have previous studies that show us what are the possible hypotheses that could be used to study this area so that to take precaution. Hassan identified 3 types of risks, namely essential risks, forbidden risks, and tolerable risks. So essential, that's fine, you can take risks. It's part of business actually. In fact, once you are doing business, you cannot totally avoid risks. It's essential in business. But there is also forbidden risks, such as the one that I mentioned in gambling. That is forbidden. In speculative activities is also prohibited. There is tolerable risks, which you can now transfer or share, which is acceptable in a Sharia compliant manner. In fact, according to Swalem 2006, the hedging that leads to zero-sum game is prohibited as an additional kind of thing. These are all studies in various jurisdictions such as Kuwait, Malaysia, Indonesia, that study risk management, and we use them to develop the hypothesis. And these are the hypotheses that we wanted to test. We have tested. There is significant difference between the level of risk management practices of Islamic banks in Nigeria and Malaysia. There is significance. Previously, I mentioned the 5 aspects of risk management. You got risk management practices, you have risk identification, you have risk control and monitoring, risk assessment and analysis, and understanding of risks. So based on these 5 components, we use them to develop 5 hypotheses. In addition to these 5 hypotheses, we got the 6th one, which tries to see whether there is positive relationship between risk management practices and understanding on this component, whether there is positive relationship. So the first one, as I said, trying to see the level of risk management practices in Islamic banks in Nigeria and Malaysia. The second hypothesis tried to measure the level of understanding risk management and techniques used in Islamic banks in the 2 countries. The third hypothesis tried to see whether there is significant difference between the level of risk identification in Islamic banks in Nigeria and Malaysia. And the fourth one trying to see whether there is significant difference between the level of risk assessment and analysis practice in Islamic banks in the 2 countries. The fifth one trying to see the difference, if there is significant difference between the level of risk control and monitoring of Islamic banks in Nigeria and Malaysia. And finally, trying to see if there is positive relationship between risk management practices and other components that I have mentioned earlier. Now, to do this, we adopted some methodology. Of course, this is a survey study, an empirical study based on survey data was collected. We identified the banks, since this is a bank study. We identify banks in Malaysia and in Nigeria. We use questionnaire developed by Al-Tamimi, Al-Mazuri, Hassan 2009, Shida, and others 2014 to of course modify questionnaire for the study, whereby it has 7-point Likert scale, and respondents were asked to show their level of agreement from 1 to 7, and their perception about the total 40 close questions relating to risk management practice. So we got about 40 questions representing various components of the risk management that I have identified. In Nigeria, the total of 200 questionnaires were distributed among staff of branches, 3 branches, 1 full-fledged Islamic bank, that is Jaiz Bank, Nigeria PLC, and the 2 Islamic banking windows, Stanbic IBTC and Sterling Bank. So the response rate we got was 52%, which was okay. And also in the case of Malaysia, the data was collected from 17 Islamic banks identified by Bank Negara Malaysia, which is a total of 255 questionnaires was distributed. However, we have used 136 for the study. Now, we employed various statistical techniques to, study, to do the analysis. Preliminary tests were done using the Cronbach alpha, using the correlations to see, to make sure the data is okay. The estimated result show that the instrument is reliable, and this is very important. The instrument that one is using is reliable, then we can proceed with the study. And we use t-test and analysis of variance to examine the significant difference between the samples of the study. We also employed multiple regressions to examine the relative impact of independent variables on the dependent variable. Similar techniques were used by previous researchers. Now, this is a result of preliminary tests using Cronbach alpha to see whether the various components are okay in terms of this benchmark. And we found they are all okay with a minimum of 0.5 Cronbach alpha in the case of Malaysia in the risk identification measure. So this is the one that has lowest. Nunali 2007 and 2009 confirms that any value of more than 5 is okay, and 0.7 is good, and 0.9 is excellent. So you see from the result we got, most of the result we have is 0.8 and 0.9, which is okay for this study in both countries. Now, regarding the hypothesis, the first one that we hypothesize the risk management practices. Okay, we have 11 indicators for this particular hypothesis, and we have the overall test that we made. Interestingly, from this particular one, we got only 2 indicators that are significantly different in the 2 countries. The one that is highlighted red is the one that we found difference. Meaning to say, because there are many, I will focus on those that we found significant difference. Number 4, your Islamic bank's policy encourages training programs in the risk management and Islamic ethics areas. So what we found here is that there is significant difference between using the p-value between the 2 countries, whereby Malaysia has higher mean 5.68 compared to Nigeria with 5.32. And this is significant, which means that Malaysia has encourages or policy that encourages more training and Islamic ethics in terms of risk management. And we are not surprised with this finding because of the relevance, the maturity of Islamic banks in Malaysia as compared to Nigeria. You got many institutions and banks practicing or training the staff. Also, in the application of Basel II, Accord will we found that Malaysia also having higher mean, and this is also significant. Okay. In the second and overall, this hypothesis is not accepted, meaning to say that there is no significant difference between Islamic banks in Malaysia and Nigeria in terms of risk management practices. This is one hypothesis only, which is not significant overall. We have some indicators which are significant. We go to the second one, understanding risk management, whereby we have there is about 3 items. Before we come to the overall, there are 3 items that we found they are significantly different in the 2 countries. That is common understanding of risk management across Islamic bank. In that case, Malaysia has higher mean 5.98 with 5.63 in Nigeria. Responsibility for risk management is clearly set out and understood throughout the bank. We also got 5.90 for Malaysia and 5.51 for Nigeria, and the other one 5.85 with 5.56 in Malaysia and Nigeria respectively. And the overall result for this particular hypothesis is that it is significant. We found it is significantly different in the two countries, actually. So that's the second hypothesis. Okay. And the third hypothesis that we have is identification of risks, whereby in this factor we found some elements that are significantly different in the two countries. Number two, changes in risks are recognized and identified with the Islamic bank's rules and responsibilities. The Islamic bank is aware of the strengths and weaknesses of the risk management system of the bank. In this case, we found Malaysia having lower mean in the second one with 3.25 and 4.43 in Nigeria. In the second one, we found 5.73 in Malaysia and 5.38 in Nigeria. We are not surprised here also because altogether, I mean, because this is one indicator only, whereby Nigeria having higher mean compared to Malaysia, but yet Nigeria also got some experiences, of course, in the general banking practices, so it's not a surprise when you have this kind of finding. Okay. It's not showing the short thing. Yeah, so the overall is not significant. The overall, when you look at the last column, overall is not significant. Okay. The fourth hypothesis, risk assessment and analysis. Here you can see many indicators are having they are significantly different between the two countries, and overall also it is significant in terms of risk assessment and analysis. This is also another finding that we found, and of course you can see the higher mean Malaysia, I mean having the higher mean compared to Nigeria in terms of risk assessment and analysis. Risk control and monitoring. We got only one indicator that shows the difference, but overall this is not significant, so I want to move to the next. Okay, so this is in terms of using the technique to measure the mean and the p-value to measure whether it is significant or not. But we also go one step further to see the regression model to see whether the effect of independent variables on the dependent variables are identified earlier, and these are the ones which I have been mentioning. Now, this is a result of the regression, okay, but in tabular form. Let me just move here so that we can just focus on. So based on this result, the adjusted R-square are found to be high with value of 0.69 and 0.64 in Nigeria and in Malaysia respectively. Overall stand at 0.612. It was discovered there are significant difference between the two countries with 59.46 in Nigeria and 57. Overall, this model is okay and is robust and accepted, but we have to look also deep into the value. What does that mean in real sense? The finding here, while in Nigeria it was found that understanding risk management and risk identification were significant predictors. Okay, when you look at this table, I have highlighted the indicators that are significant. The red one here in Nigeria, understanding risk management is significant, and risk identification is significant. While in the case of Malaysia, it is the risk assessment and analysis that is significant, and risk control and monitoring that is significant. All right. And overall, here we have highlighted it. Understanding risk is significant. Okay. Risk identification also is significant, and the risk control and monitoring is significant. So overall, the whole data, we have the three indicators that are significant. But when you come to the two countries, then you can see two here, and yeah. Now, this is consistent actually with the finding or the findings of previous studies, except that in the previous studies, such as Rashida 2014, it's not risk identification is not statistically significant for the overall study. While in Nigeria, understanding risk management is the most important factor that influences risk management practices. In the case of Malaysia, risk control and monitoring stands as the most influential factor of risk management. Meaning to say that then Nigeria has to focus on to the understanding risk management as the most important factor in terms of risk management practices. In the case of Malaysia, what we found is that risk control and monitoring is the most important factor that they need to pay attention to. Overall, I mean, this is kind of the findings actually, and this is the summary that we have so that you can quickly glance at it in relation to all the hypothesized propositions. There is significant difference between the level of risk management practices of Islamic Bank in Nigeria and Malaysia. This hypothesis is not supported in the study, in this particular study. It may be supported in that, but this is what we found. In the second hypothesis, there is no significant difference between the level, there is significant difference between the level of understanding risk management and the techniques used in Islamic banks in Nigeria and Malaysia. This hypothesis is supported in this study. And the third one, we can now say there is no significant difference between the level of risk identification. And the fourth one, we can say there is significant difference between the level of risk assessment and analysis in the practice of Islamic banking in the two countries. And the fifth one, there is no significant difference between the level of risk control and monitoring of Islamic bank in Nigeria and Malaysia. And finally, in terms of the positive relationships and the impact, we found a kind of partially supported, because you got 2 here, and overall 3. So a kind of partial result for that matter. Now, what can we conclude from this finding? The research therefore examines the differences in risk management practices, risk management factors in the countries under study. It was found that there is significant difference in terms of understanding risk management and risk assessment and analysis between Nigeria and Malaysia, with the latter taking the lead. Okay, this is, of course, we know how far Malaysia has gone in terms of development of Islamic banking and finance. For the last 30 years or more, Malaysia is doing well, promoting Islamic banking, putting the infrastructure, the regulation, and what have you. Even recently, starting from the Islamic Banking Act 1983, whereby that regulates only banking, changing it in 1993 to allow trading activities in the banking sector. And then now, coming up with the overall regulation in the name of IFSA, Islamic Financial Services Act 2013, which is more comprehensive, taking care of most of the requirements for you to operate Islamic financial system. That really tells you about the development and how robust Malaysian Islamic finance is. So in terms of this, we are not surprised when we got some findings, or most of it being supported, and whereby. But however, the result, is also, it exhibits some relative competition in risk management practices between the two countries. When you look at Malaysia having 2 that are significant here, Nigeria 2 significant, even though Malaysia is leading in many respects, but that tells you that also Nigeria having some good starting in terms of the risk management, in terms of Islamic banking and risk management practices for that matter. So therefore, we got, in summary here, we say out of 5 dimensions, 3 are not significant. When you compare the 2, you have 5 components. 3 are not significant, 2 are significant. And those that are significant, Malaysia leads. Okay, what happened to those that are not significant? Who knows, maybe in the future, things could change for better. So this is, I think, anticipated findings. The expertise also the country has in general banking might explain its relative competition. That is in the case of Nigeria, because virtually Malaysia is just like age mate of Nigeria in terms of the independence and what have you. So the banking experiences is always is also there. So therefore, that could explain why you got some robust result here. And Nigeria also, has a huge potential to positively change even the landscape of Islamic finance, not only in Nigeria, in Africa, and by extension to improve or to take the Islamic finance industry to the next level, because the population matters, and also specifically the Muslim population was more than 90 million Muslims. Malaysia was only more or less 20 million Muslims, so to say, or less, right? Yet they are having such a growth and achievements. And Nigeria, you got 90 million Muslims. So probably in the future, if Islamic finance expand, or if the regulations and the infrastructures are put in place, that could change the landscape, financial landscape in Nigeria and in Africa. Now, we also therefore recommend risk management practice process in Islamic banks may require additional legal and regulatory framework to strengthen their existing condition, because as it is now, still you have some issues that are legally, having unresolved issues legally or in terms of regulation. So in both countries, this needs to be improved further. Because what Malaysia has attained is not the final level that we want to see Islamic finance reaching. There is, of course, the next stage that they can always improve further. So also Nigeria that is coming, we got the first Islamic banks in 2011, the full-fledged Islamic bank. So the 5 years of its operation, really, we are even surprised because it is achieving a lot, recording some profit, a break even for last year and this year, recording positive returns for the investment. So, so therefore, finally, we say this research, maybe further research should investigate the rigorous risk management techniques that are used by Islamic banks in the two countries, because this study we have not such what you call study or rigorous measures that are used by Islamic banking in the two countries. So with this, I thank you very much for attending to this, and I welcome comments and contribution. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you very much, Dr. Ali, for your informative presentation. Now we open the floor for any question or comments. تفضل دكتور.
وعليكم السلام ورحمة الله.
Thanks for done this presentation. It's good.
Thank you.
Okay, just very short questions.
Okay.
Okay, if you put like your slide on the last conclusion, have you got that for this? No, after this. Because sorry, I could not read the screen at all. I just heard. Okay.
Thank you.
Because in terms of risk management and understanding, okay, understanding see the very difference between Nigeria and Malaysia. Okay, then in Malaysia they are all under monitoring, or maybe opposite, but I don't know. So, what is the justification behind it?
In terms of understanding the...
What is the focus or level of focus on the different part of the risk management? You see there are differences between Nigeria and Malaysia.
Yeah, that is in terms of some indicators, not to the overall.
Yes, the indicator. Why is the difference?
Yeah, of course, what we thought is that the experience that where Malaysia leads, right? The experience that Malaysia accumulates really matters whenever we want to explain about practicing risk management in Islamic banking. They have been doing this thing for the last 30, 40 years, right? So when they understand for instance, in terms of the various component of financing techniques, mudaraba, musharaka, ijara, and what have you. They have accumulated a lot of experiences and understand it well, compared to Nigeria, whereby it's coming now, and people are trying to learn from those who already experienced it, such as Malaysia, Indonesia, and Bangladesh. So I think that could explain the experience matters. I don't know if you, yeah.
تفضل دكتور زاهد.
وعليكم السلام ورحمة الله.
Thank you very much for the good presentations and the topic also.
Thank you.
And the topic on risk management in Nigeria and Malaysia. It's a good background about Nigeria and Malaysia, because Nigeria, they just starting Islamic banking.
Yeah.
And I think 2011 they were only one bank.
Yeah.
At that time.
Yeah.
Size of the bank, how many bank now?
Okay, now still you got one full plate, and then you got two Islamic banking windows, Sterling Bank and Stanbic IBTC, and the others are in the pipeline. There is one is coming full plate, but it is not approved, so we cannot mention more about it. But yeah, this is the exactly.
This will not prevent you to debate the behavior of the risk in the country.
Yeah, exactly.
But I wonder the nature of the risk in Nigeria, if you compare the nature of expected risk in Nigeria and Malaysia.
Yeah.
I think it's totally, different. In Nigeria, the risk expected, the hazard is very high, very high.
Yeah.
And also, do you consider that when you are?
Yeah, of course, because we are using standard kind of instrument, and most of these are captured, whether it's hazardous or not. When you don't follow due process, for instance, in financing something, whether in Malaysia or in Nigeria, then you are exposing the capital at risk. You got the point. Of course, we understood what you mean by the environment, probably. But when it comes to banking, as I said earlier, the experience is there. People are very much, and that is why maybe the financing is less in Nigeria compared to Malaysia. When you apply, for instance, for financing, the acceptance rate is higher in Malaysia compared to in Nigeria. I mean, that could be what could explain that.
Measuring quantified indicator or qualified.
No, you are getting information, you are sourcing information, extracting from the various aspects. Exactly.
Yeah, but I think if you add the quantitative indicators, it will give you the big picture.
Okay, we will consider, studying.
And then, what do you think about risk management at all? Because recently, the recent research about transferring risk.
Yeah.
Of course, managing the risk, you are transferring the risk.
Yeah.
So we can, but transferring the risk, increasing the risk.
Yeah.
What do you say?
Yeah, of course, I have mentioned at my background. Some of the risk transfer is unwarranted, it's uncalled for, it's not needed. In fact, in Islamic finance, we are to practice seriously, it should be risk sharing instead of risk transfer. Why do you need to transfer the risk to someone? But in the finance or conventional finance, they say you transfer risk to those who presumably able to bear it. So if they can bear it, that's fine, they can absorb it. But actually the real teaching is that risk should be shared, because if you want to share profit, then you should also share the risk. Wallahu alam, this is my stand on this.
Yeah, but in Islamic bank it's still that.
Yeah, exactly, and that's my position, that they need to improve the regulation and what have you. There is need for improvement, be it in Malaysia or in Nigeria or elsewhere, we are really not fully satisfied with the way risks are transferred in Islamic finance. You know, if it is happening, so it need to be improved further, need to be enhanced. Of course, some of the obstacles are understandable, but there are ways really to improve situations for better. Thank you. Walaikum salam. My teacher. So my teacher and my director. It's my teacher and my former director.
Welcome,
Professor Sheikh Usman.
Welcome, Professor. Welcome.
Abdul Ghaffar.
Nigeria to the conferences that we had in the last 2 years consecutively. I congratulate the presenter for the presentation. And I would say because I joined late, I was not there when he presented, but understanding risk, we know there are many dimensions of the risks. Market risk, policy risk, legal risk, external risk, change of macroeconomic and so many of this. Within the question here, we have approached and touched on all these categories or classifications of risks in eliciting information from the respondents. So that's very important to know all the various tentacles, sources of the risks affecting, especially in Nigeria, where, like rightly said, the Islamic banking industry of 2011 and operation started in 2012. So really, it's still at its infancy stage. But then somewhere in the management of the risk, he said it's not supported. But then the variables in the measurement of the compact alpha, incidentally, they have almost the same value. Although very impressive, but the same value. I would say, given the young industry or the young sub-sector or sub-finance operations of the Islamic bank in Nigeria, how could that be possible that if the management is the same? But more importantly is in the risk identification. The risk identification, although the variable is not significant from the combat alpha, 0.7 for Nigeria and a little above, and then 0.5 for Malaysia. I was saying, would Nigeria be more or better off in identification of the risk, although still very young as a player in the industry and yet being dominated largely by conventional banks, but then still being able better in identification of the risk of Malaysia. And then although the hypothesis also is not supported, but then when I looked, when you are presenting the multiple operation results, I would not say a surprise, but surprisingly, the identification is significant. It's found and significant in the model. So I said, can we follow it up from the Cronbach's alpha test and the hypothesis not supported, and yet the variable is significant in the model. What does that suggest in the entire model? And I salute the courage of the researcher by boldly reporting exactly the outcome of the empirical study. Not supported, not supported. It is 3 out of 5. Were not supported. So much he was able to confidently say that these hypotheses are not supported. So it doesn't show any element of bias in the way that the results were reported. So I commend the presenter and I sincerely thank you for the opportunity to join this presentation.
Okay.
Thank you, Professor. Thank you very much.
Okay.
Yes.
Can I respond? Or you want to?
No, it's okay. You can respond.
Huh? Yeah. Either way, depend on the manager.
It's okay. You can respond.
No,
you can respond.
Yeah, we can be interactive, no problem. Of course, I thank you, Dr. Abdurrahman, of course, for the comment. The qualitative aspect, we look into it because it's still working paper and then not completed, not published. So inshallah, we will consider your recommendations for that matter. In terms of the professor and my lecturer, of course, my former director, he raised issues about the questionnaire. Basically, what happened was, we got the standard questionnaire, and I have mentioned it here. We have adopted it from previous studies. And this previous studies, they look into all the dimensions of risk management, the monetary, the stability, and what have you, the market risks, operational risks, credit risks, liquidity risks. So when you look into detail into the questionnaire, you got all these elements inbuilt into the questionnaire. So it's not like we have to take operational risks and give it as a separate variable, liquidity risk, but we build all these elements in the questionnaire. And that is well noted, and also, but then that is the case. In terms of the findings regarding the Cronbach Alpha, the Cronbach Alpha was meant to, to make sure the questionnaire, the instrument is robust. We are not reporting this is better than this, but we are reporting that we can accept this instrument as it is, and we can forge ahead with the further analysis. And when you look at the risk identification, yes, correctly, Nigeria having higher value, 0.7 compared to Malaysia with 0.5. Yet 0.5 is the minimum, so you can accept it. What explained 0.5? We were not also surprised, because later on, when I take this some element under risk identification for further discussion with some colleagues, we realized some questions really were not clear for Malaysia. It is here in IDB. I went to ITFC. I forgot the doctor that presented something on risk management here. We were discussing the instrument. So when I showed him, and he really commented, and I noted that some questions were not straightforward, not clear. So he said, if it is a market, this is what I will understood. So okay, noted. But we cannot reverse. But this is minor issue. But overall, it enabled us to forge ahead with the research, with the further analysis. In terms of the result of what do you call the multiple regression? Yes, the risk in identification is significant, and that's what we found. Since the value or the instrument is acceptable, and we use it to run the regression and ensure it is significant, so we also, as you rightly mentioned, we have to report what we found, but it's further subject to further discussion and suggestion if there's any way to maybe improve this aspect or to maybe conduct additional analysis to make sure that we are not reporting something that should not be there. That's my response. Thank you very much. I think that
Dr. Abdullah.
Thank you. Maybe my question is in line with our good friend from IOUC, the former director of IIBM. My question is related to the very fundamental, actually, who were the respondents? Okay. Because maybe I missed that point. Okay. The reason why I asked that question because of, bankers, normally they are very specialized person. Yeah. So when you work at the front desk and when you work at the back office, so you are very specialized. Yeah. And based on my experience, sometimes they know about the sharia risk, but they don't know about the operational risk, or they don't know about the credit risk. Okay? Yeah. So this is first one. Why I asked that question. The second reason why I asked that question because of we have not settled that on the issues of the linguistic term. Okay. There. Sorry. Okay, this there because this linguistic term can have an impact on the definition of risk. Okay. Yeah. And not only on the definition of risk, but also again, I agree with our way of view is that the sources of risk.
Yeah.
And furthermore, scholars also disagree on the theoretical basis.
Yeah.
Okay, on the theoretical basis of risk.
Yeah.
Because sometimes they derive their risk from the contract theory.
Yeah.
But sometimes they derive that from the this agency theory.
Yeah.
Okay.
Yeah.
They disagree on that.
Yeah.
So meaning that the understanding of the bakers is very important here, and that's why I asked that question.
Yeah.
That who were the respondents? I don't want to ask the result because the result can be you can plug in the computer and you can get the result from the compliance. Okay. Thank you very much.
Thank you very much. You can give chance to others.
Okay, Doctor.
Thank you.
Yeah, thank you.
Straightforward question. In one of the response you mentioned that if there is no risk, then it will amount to river. Would you mind to enlighten us more than this?
Yeah, okay, no problem.
So,
Okay, thank you very much, Prof. Abdul Ghaffar. Regarding the respondents, I have mentioned in the presentations, actually, these are banks, staff of the banks, of Islamic banks in the two countries, okay? These are the respondents. And we have distributed to all the banks that operate Islamic banks in both countries. Okay, that is one. Regarding the department, I mean, yeah, of course, I can understand the different specialization, but previous studies have shown that even in the questionnaire, you got the percentage of people in the risk management department, in credit, in internal. Most of them, they are from risk-related department, the respondent. So therefore, we can safely continue with our analysis. Not only that, if you remember one of my slides talking about creating the risk culture, looking at risks comprehensively. So that will also inform you about the need to contact other departments. Because if you take risk management department only, how many staff in the risk management department? Not many actually. So you have to look open to operational department and other risk-related department. If you take risk management as a culture, a part of the organization, then you can ask all the senior and middle staff of the bank, and that's exactly what happened. Regarding the theory or the different understanding, I think that will continue depending on the school of thought, contractual or agency theory. Perhaps we have no control over that. But in terms of investigating the differences, we have to have some measures to do the thing. This study, we have adopted previous studies such as Hassan 2009, who studied the risk management practices in Brunei. We have others who studied in Malaysia and Indonesia, such as Abdurrahman 2012, in the case of Indonesia, 2014, Al-Tamimi 2007. So we got many scholars that adopted actually the same method, regardless of the theoretical background, because at the end of the day, you may end up learning from all these theories and find your ways of developing your method or instrument that you want to study. And that is what we did. This is my response. Allahu Alam.
If you say so, meaning that this stuff also become the subject of this, or the object of this.
So how can they be the object of risk? They are just respondent to understand. And I think one important thing that I want to mention, when you say this is new in Nigeria, for instance, and this is advanced, of course, that will tell you the level of understanding the risks. If Malaysia we found it leading in terms of understanding risks of other majors, that is exactly what we should anticipate because of the experience they have gathered over the years. And this is just coming, right? So you should expect probably maybe lower level of risk identification or other things. And I think that is not in contrary with our expectation. So. Okay. Yeah.
Question on pure risk, correct?
Oh, okay, so.
Okay. Assalamu alaikum. Thank you very much for the educative research and wonderful presentation. Must have been a tasking journey, no doubt. My question is, if you were to give one advice to practicing Islamic bankers on how to improve risk management practices, what would it be?
Okay, when you talk about practicing Islamic bankers, firstly, they should know about the theory, the Islamic finance theory on how to do this thing. When you remember, I think that Taslim asked me about to elaborate on the slide which shows the, that Hilmon about the risk spectrum. At one end you have riba, at the other end you have gharar, and then in between you have Islamic finance. So unless until Islamic finance, Islamic bankers understood this very well, then they may end up falling into the same trap with conventional banking, because they want to, for instance, share the risks. If you see this slide, okay. So to my left, okay, absolutely no risks. So that will lead to riba. No risks, and you want to gain something. That is riba. Like what is happening in conventional. Give a loan, guaranteed credit, and then you want capital plus interest. That leads to riba. And then at the other end, you have pure risks, which you like engage, one engage in gambling or speculative activities, depending on how much he has gone far in doing so. Okay, if it is pure risks, the last edge of the arrow, so that is pure risks like gambling, which is clearly prohibited in Sharia. It's mentioned in the Quran, right? So therefore, for bankers, Islamic bankers, they should be in the middle. Islamic finance is in the middle, and that is not a surprise. For Islam, the approach is always to be moderate, right in between. And they need to engage into further trainings actually, so that they will be acquainted. Because what we found also is that some Islamic banks, maybe they are reluctant to send their staff for training, Islamic finance training. This is our experience. So in order to really improve the situation, to make sure what the bankers are doing are right, is right, then you have to really make them knowledgeable and aware about that thing. This is my recommendation.
Thank you, Mr. Chairman. And unfortunately, I missed the bulk of the presentation, but I've had time to go through a bit of what has been presented.
Yeah.
I'm as an interest from the legal department. Unfortunately, I happen to be a pioneer staff in the first Islamic bank in Nigeria. I worked in the credit risk department at the time. In fact, we worked together to set it up. One thing I just want to share a little experience, in terms of the risk awareness, that you have. To start with, at the regulatory level, the framework for the Islamic risk management in Nigeria was modeled after Malaysia's model, having a technical partnership, having a technical, grant given to the central bank, very IDP, of course, and the active partnership of BNM in Malaysia and FSD. So what you have in the framework of Islamic risk management in Nigeria is modeled after what we have in Indonesia. Yes, there have been years, between Malaysia and Nigeria in terms of implementation of this model, but risk management totally in itself, it's not a new, sort of orientation for the Nigerian banking system.
Yeah.
So what you find is a typical disconnect in terms of paradigm shift. Most of the staff we had in the Islamic bank moved from the conventional setting. So the mindset of the risk management using certain conventional parameters happens to be what is placed, in the Islamic setting. So there was a need, of course, for training to sort of adjust the expectations and realities of Islamic contracts, and sort of the risk requirements for those contracts for us to appreciate what the model actually offers. So it's not a surprise to actually see the comparison actually tallying, the way the results actually show. But
5 years into this practice, which is sufficient for a little bit of appreciation of the concept, because we don't have to go through a long learning process to actually leap forward and actually do it. So I think it's a very good presentation altogether, and topical indeed.
Thank you.
Right.
Thank you very much. Jazakallah khair.
You want to comment?
No, sir.
تفضل دكتور.
Yes, thank you, Dr. Ali, for the presentation. Some of my questions you have addressed them earlier, because my first question was really about how this type of risk component, like risk identification, management, evaluation, risk transfer, etc., how does it fit Islamic banks? And I think that you addressed it very well. So overall, the presentation was good and very informative. I just have small teaser as a statistician. Usually when I attend presentations, I always want to maybe bring that kind of a small flavor of like quantitative component. What the Cronbach alpha is really usually cited as, and the word that they use is a measure of the reliability. But what it is really doing is looking at the correlation between the components. Let's say you want to measure intelligence, and you have different questions to measure intelligence. Are they consistent? That's what it is measuring. Now, if by mistake you remove the word intelligence and put the word like trustworthiness, you wouldn't know. You run it, you have your Cronbach alpha, and you call it, this is the reliable measure, reliable measure of trustworthiness. But actually, it's not a reliable measure of trustworthiness, it's the reliable measure of intelligence. So the justification should not be, part of it should be, the Cronbach alpha, but the justification of whether what our construct is really reliable or not, the justification should be more from the literature, or going into the component and explaining that these components are really all measuring a different aspects of intelligence. So that's just what I wanted to, kind of give the attention.
Thank you.
And other than that, I think, that was really good presentation. Thank you very much.
Thank you.
You want to?
After him, I can comment.
So thank you very much for the presentation. My question is related to Hassan's contribution. There was a roundtable actually organized by UT in collaboration with the World Bank 2 years ago on Islamic finance. And one of the issues that came out was that what they call the new comebacks in Islamic finance. People who spent 20 years, 30 years in the conventional banks have decided to remain in Islamic finance.
Thank you.
So, I've got one of the participants there. So that's one aspect of the problem. But secondly, also, you have people who have an understanding of the Sharia components of Islamic finance. They totally like it in the conventional sense of it. And this create a kind of vacuum in the practice of Islamic banking. What is your take on this, and how can Islamic banks address this? And in terms of the responses that you get, in terms of making the understanding of risk management practices, did you have a feeling of that in the responses that you get from the respondents? Thank you.
Okay, thank you very much for both comments. Dr. Osman Sek, your point noted. Inshallah, I would add the flavor into my research so that it will be more tasteful. I'll add it, and of course. But all together, we also made, a kind of validations, the first validation of the instrument to make sure the statement are relatively okay, in addition to what we have adopted. Dr. Jamil, thank you for the question. Regarding the recommendation probably on how to bridge the gap, how to reduce the vacuum or remove it if possible, certainly is through training and education. And that is why in the long term, we are proposing a kind of integration of this kind of knowledge. So the integration of knowledge, you got Islamic knowledge and then you got conventional knowledge. So instead of just you to go and study finance, masters in finance, you go and study master of maybe it's finance, but the component, the significant component that is Islamic in it. It can be called any name. It can be called Islamic finance or it can be general finance, but in it the component, the significant component is also on Islam. Like what's happening, for instance, in universities like International Islamic University, Malaysia, and other universities, and also like what is happening now, the new institute that we have in Institute of Islamic Banking, whereby a student could come and study master in Islamic finance. In the undergraduate also, you need to increase more courses, subject that student will learn about Islamic banking and Islamic finance, and also you need to bring more exposure into the practice so that students, while learning, they are also really seeing what is happening. And that is my position as far as bridging the gap is concerned, because there are so many models. Some they say you should go for double degree. What's double degree? You do your first degree in economics and then you add one more year in Sharia department. Okay, or you do minor. All right, these are kind of a proposal, and it happened. I mean, somewhere it is being implemented. How to measure whether it is okay or not is another issue. But really, I think that it needs to bring more Islamic knowledge into our conventional disciplines, because the bankers, all they know in their thinking and their training, in their theory first, they know the conventional. And when they come to the practice, there is nothing Islamic for instance, for that matter, right? So unless if you expose them theoretically and practically, the gap will continue. May Allah help us to reduce this gap, inshallah, in the near future. So,
yeah, there is one.
okay. Okay, please.
There's a question: how can you validate your basis of comparison, as Malaysia has been practicing Islamic banking and has a lot of Islamic banks, while Nigeria implemented the Islamic banks in 2011 and with only one full Islamic bank?
Yeah, okay. I think I have already explained the justification for this study. We are already 5 years into it, and the industry, I mean the banking, Islamic bank in Nigeria have break even and even recorded profit. Just last week it was published. It has recorded huge profit for that matter. So what do you wait? 5 years of experience, even if we are to use probably secondary data, right? If we are to use the monthly data or quarterly data, that could be sufficient for us to run some tests and verify. And again, in addition to my brother Hassan, what he said, the models adopted from Malaysia and other experienced countries. So if that happens, so we don't need to go through the learning curve. We are not starting all over, I mean, afresh. I mean, we have some benchmark that we are building upon. When Malaysia started Islamic Bank, I have interview with a scholar who said, you know, a banker, he said, when we started Islamic Bank, we just want to have the name. Am I right, Prof? Can you can correct me if I'm not? We just want to have the name. I mean, we just want to. So, I mean, put in little understanding that we can have, because there are no many Sharia experts that will say this is it, this is correct, this is not correct. But the little they have started, and Alhamdulillah, they improve, making laws, providing training, education, and they now see where they are. So therefore, I mean, we are learning from them. So they have already established the thing that we can build, the foundation. So we don't need to go through the learning. I think that is my position. We can compare between Malaysia and in fact, we did compare. The result is here. So,
we have another question: how is your hypothesis apply in credit risk?
Yeah, I already also explained that we have not only credit risks, we have also operational risks, we have liquidity risk, we have, yeah. So therefore, the hypothesis that you have seen actually is developed from the element of questions that take care of all these aspects of risks, market risks, exchange rate risks, liquidity risks, credit risks. So there is it all inbuilt. So therefore, we don't separate just credit risks. We are not focusing on credit risk. Actually, we can do so if we like, but that's not the focus of the study.
Okay. One more question. I would like to know what is Dr. Aliu going to do to bridge the gap to understand the risk, especially being in Nigeria.
Of course, one way is this kind of studies. By highlighting this study, certainly now people will look into risk management, and further studies will also be made. So awareness is one, training is another, and perhaps also recommendation to the policy makers, I mean the stakeholders in the banks on how to bridge the gap, the risk management, or understand the risk management and Islamic banks in Nigeria.
Any other question?
To make a comment.
Yes, please.
Islamic bank owned by non-Muslim, they are more Islamic than Islamic bank owned by Muslim.
Okay, how can you elaborate?
Normally the Muslim take for granted.
Okay. Okay.
Just to add,
okay.
I'm doing a research on how to come up with a model, the models that can be used to capture the Sharia risk. Maybe we can share it.
Okay, please. Sure.
Yeah.
Sure. Okay, thank you.
I would like to thank you all for your attendance and support. Inshallah, I hope to see you again in our future seminar. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh.